Peter Schiff joins us live from Weston, Connecticut. Good to have you on again, CEO, Chief Strategist, Euro Pacific Capital. Normally, you and I are arguing about the right and the left, but this time we're going to talk about Abenomics and the economy there. And I don't think there should be too much arguing about the fact that what the Prime Minister there is doing with Abenomics and the stimulus, it is working, is it not?
No, I don't believe it's working at all. I think Abenomics is creating problems in Japan. It is not solving them. You know, the problem in Japan is not an absence of inflation. Falling consumer prices would be beneficial to the Japanese economy. The real problems in Japan are that the government in Japan is borrowing and spending too much money. The Bank of Japan is printing too much money. What they really need in Japan is less government. They need higher interest rates. And what they need to do is start selling off their stockpile of U.S. treasuries and then use the proceeds to pay down their yen-denominated debt. That would do wonders for the Japanese economy. Instead, all they're doing is basically exacerbating the problems that they've been creating, and they're setting themselves up for a much bigger disaster.
The sales tax, this is also a very controversial topic. Some love it, some hate it, but the reason they need it is to pay back the debt that you're talking about. Do you like the sales tax?
Well, I would rather, A, pay back a lot of that debt by liquidating a lot of the U.S. treasuries. Why is Japan borrowing money to lend it to the United States? Especially when we're at the top of our bond bubble. They need to get rid of those treasuries. But I would like to see a sales tax in Japan replace a very progressive income tax that exists there right now. So to the extent that they can move away from taxing production and to taxing consumption, that would be a better way for Japan to finance its expenditures. But the Japanese needs to shrink the size of their government. They have been trying to artificially stimulate the economy by trying to, undervalue the currency recently by buying up U.S. treasuries to try to subsidize American profligacy. This is the wrong direction to go. The Japanese need to understand that it's not all about GDP. You know, if you've got an aging population and people are leaving the workforce, then you would expect to see a maybe decline in GDP. That's not something the government needs to fight. What the government has to be concerned about is the overall standard of living of the people, those who have retired and those who are still working. And the way you get that is by having a strong currency and a productive economy that is producing. You don't try to create economic growth by reflating a housing bubble or just printing a bunch of money and try to encourage people to spend when economies really grow through the opposite of that.
Hey, Peter, I want to ask you about this, this foreign exchange situation. Obviously, it's a big trade out there, people who want to go long or short the yen. Explain to our viewers who may not be experts in foreign exchange trading why we should care so much what's happening to the yen and what kind of impact that's had to the overall markets there.
Well, if you live in Japan, you should care a lot about the yen because your purchasing power is a function of the value of the yen. In fact, if you look at what's been happening to Japan's trade balance, as the yen has been falling due to deliberate efforts of the Bank of Japan to push it down, the balance of trade has been deteriorating because now the Japanese need to export more of what they produce to import what they want to consume. So the cost of your imports goes up as your currency goes down and the people become poorer. And of course, if you're a foreign investor and you're attracted, you think you're going to make money in Japanese investments, what you make nominally, you might lose in real terms if the yen depreciates against whatever currency you happen to be measuring your wealth in. So it means a lot, but they are not going to debase their way into prosperity. The way Japan became a wealthy nation, they didn't do it through excessive money printing. It was through hard work and productive investment. That's what built the Japanese economy. And there still is a lot of strength in that economy if the government would simply leave it alone. But instead, the government is layering all sorts of debt on top of that economy, trying to pursue this Keynesian stimulus. And this is ultimately going to be the undoing. It's not the disease that Abe thinks he's fighting that's going to ultimately bring down the economy. It's his cure. He's trying to cure a disease that doesn't exist, but it's his cure that is so lethal to the economy.
All right, Peter. I'm starting to wonder if there are some similarities to the problems we faced here in Washington. I want to thank you very much. Always good to see you. Have a great evening over there in Connecticut. Peter Schiff.